The following is a presentation of TFNN. It is now time for the Tiger Technician Hour with your host, Basil Chapman.
Hi folks, Basil Chapman, Tiger Technicians Hour. This is the Wednesday, February the 13th session. February the 13th is also the day that I'll be doing, the evening that I'll be doing my live webinar, my free webinar for my subscribers, and for those who have got the 2-week free subscription. And this is, I'm really looking forward to it for a couple of reasons, because the chart formations that we've been looking at that have worked out quite well up until now. We're looking at how there's a rotation through the market into certain categories of stocks, how there is a chart, there are certain chart formations that have been working out, how we've suddenly got a single leg A, that's what I call the single leg A up syndrome, where you suddenly get a spike in some stocks, how they react, how they are able to control not giving back all of those gains is going to be very important. I will get into the 5 segments that I look at every single day, my overview of the market. That is the 120-minute chart. This is this chart right here. If I can, yep. This is this chart right here, which says that there's still a chance. It doesn't have to be, because the 120-minute chart is really subservient to the greater daily chart. The tide is the most important thing, and I haven't yet got a tide change in the Dow, but it's getting real close. The day is young. We might get one by the end of the day, but it looks like there could still be at least one more pop up above 14,000. And 38.97, there doesn't have to be, but that's kind of, it's out there. This the volatility index. I'm going to talk about the volatility index that hit a high of 23.23 back in last day of December, just before December closed, and plummeted down to 12.29. It's at 12.95 right now. It's in an area where it could start to have some kind of a pop-up, but there are levels that we'll be looking at. I'll explain those levels. I'll explain why I look at them and what I do. There's the Richard Arms fantastic trend index that he developed called the Richard Arms short-term trading index. I actually use it completely differently. I say it's fantastic because it's a medium that I would never have been aware of until I discovered it, a long time ago. But I tend to use it in a completely different way, a way that has actually so far over the past few years, it has way in the 90% area of success. So it's his gauge, but it's his index, but I call it the ChapmanWave trend gauge. When it gives me a reading very often, as I say, over 90% it's a successful reading of that particular index. Then I've got the Dow chart right here. I've got the S&P daily chart over there. Those are the 5 indexes. Then I'm going to discuss the 120-minute chart. I drew this the other day. I showed that should be the neck, that should be the head, right up there. And once we get to that area, then you can start to think of some kind of a pullback. Well, it turns out we've gone above 139.89. We went all the way to today's high of 140.36. And now we're starting to pull back. But the indicator itself is not yet done, because it's a 120-minute indicator. So I have to wait. I have to wait to see when the day is concluded, because the daily is even more important. But it's done its job so far. Certainly looks like the pattern that we were wanting. And then we've got the Dow chart, which I'll be explaining in great detail here. Now, the Dow chart has made a peak F. I'm calling it an F/B at this particular time. But let me explain to you what I'm looking at here that I consider to be really important. In my 4 horsemen, GE is trading at 23.31. It's up 3.23%. I'm not sure if this is going to be called leg E or E/B. It's a fabulous move. But look at the weekly chart. Look at that technique that I use that I call the left side, right side price time match. It broke above it in one bar early. That's usually a very good sign, and I have to call this, I'm not calling this leg E, because the MACD and stochastic are outstanding. I'm calling this leg C in GE. And that means, if that is the case, that it is leg C. Oops, let me get that right. If it is leg C, there's still a leg D to go. It doesn't mean to say that C couldn't pull back from 23.31 all the way back down to maybe 22.16, the 9-period moving average, but it does say it's a breakout of some consequence. But look at this, the monthly chart. The monthly chart on GE is finally about to test. What's the high today? 23.44. For how long have subscribers and I been looking at? We had G down in the 16s, had a fabulous gain, got back in it just recently, and 23, the 200 period exponential moving average of 23, it's now 23.81. It was 23.56 when we started looking at it. 23.53. Nick of New Jersey. It'll be, the seminar tonight is at 6:30 to 7:30 Eastern Time. It will be archived. And I'll be going through how to read my opening call with all those. I don't know how many. Let me just check here. I'll tell you right now how many charts I sent out this morning. Let me just go to that. 1, 2, 3, 4, 5, 6, 7, 8, 9, 10, 11, 12. 12 charts. Now, you don't even have to look at those. I'm going to teach you. I'm going to show you how you can use just the Trader's Corner, the last page that gets sent out about 8:35 every morning with the trades that we want, and why I'm looking at it and how you can use it, because the first paragraph essentially sums up all those other charts that I'm talking about in chart patterns and the indexes, etc. Just a real brief summary. Then I go through the Dow Diamonds. If we are short, it'll be maybe the DXD. That's 200% short the Dow 30. Then the Qs and the whatever stocks it is. I always include the GLD. I include the TLT. Whether or not we have positions there. I include stocks that I'm looking at. We might not have a position. Why? I also show those charts. So it's going to be very, very interesting, but it's more important than that. I'm also going to discuss some techniques, some psychological things, how that little trading god, that little elf that sits on your shoulder and wags the finger and says, so you think you can buy now when all the time you've been looking at it as a short, or you're going short when in fact you only have buys on your in your portfolio? What are you gonna do? Is that the right thing? Are you just choosing to do it arbitrarily? What are you thinking about? I'm going to go through all those things. I'm going to explain why I've picked the stocks I have, why I keep tight stops, why we missed, big deal. What can I say? By 10 cents, we made a 10-cent profit on LinkedIn the other day. Things shot up because our stop was hit. I didn't want to take a loss. I could have probably put in a 1-point stop, 1-point loss, but I felt if it closed at the low and there were any signs of a negative report, it could drop really sharply. I'm prepared to give up gains sometimes rather than to incur very steep losses. Now, so LinkedIn's shot up and it's up at 154. We were in at 122. We were in twice. We actually made some nice money on LinkedIn, but this would have been fantastic to stay in. So I'm going to discuss those. I feel quite free to discuss the false and the positives. Doesn't bother me. It's being consistent, and that's very important. So let's just go through all the numbers. So that's tonight. If you are interested in this, I'm going to be discussing techniques. Look at this technique. The left side, right side, price time match. Look at this. There's the trend line. There's everything here for GE. And look what it did. In one bar, it broke above 23.80, 1 bar early. Those are the techniques that I like to teach. I showed this falling axe pattern right here in G at 22.54. And the doji I discussed, 22.54, 22.58 on the 29th of January. Then I put in you see those two declining lines? It's called the falling axe in my ChapmanWave methodology. I'll also be discussing the CD, introducing the ChapmanWave methodology, which so many of you got. Which chapters, which sections are applicable? So this is the falling X, breakout formation. See the red line there? That's the 9-period exponential moving average. See the MACD, it's curved to the top. See the stochastic holding at 84%. I will be discussing all those. Let's run the numbers. Way more important. Here we go. The Dow is down 33. Now, this is really important. Why? Because, the reason why I got to this is my Dow Quartet index. It's not really an index. I just made it up. It's something that I've used for ages and ages. I use GE, IBM, Triple M, that's 3M, and UTX as my kind of benchmarks. UTX is actually the pilot light. Now look at this. GE, great breakout. Very strong, telling me that the market is finding some leadership. It also says, okay, IBM. Well, IBM made a peak E, that gap up, news was earnings or something, that gap up to 208.58. Well, it's stuck. 208.58. That high bar with a gap, that gap's being filled here. It's actually doing okay, but it's in a short-term down move. The weekly chart went to a peak D. You know how important the peak D is in my work, but the MACD is still holding quite well, and the stochastic's at 74%. So this has to be watched. It didn't make it back to the top in this cup formation. Whoops, it did. But not quite. So that's the left side, right side price time match, and it failed to get there within 1 bar. It failed to get there. Now the IBM 198 is going to be really important support. Wait a minute. There's a pattern that I talk about a lot when I do my Master Trader series. It's this double cup formation going to a top. Well, that often creates a tremendous resistance in the top. That would be for IBM between 208 and 211. And it says you can go into this trading range for a while until you decisively break out to the upside. And look at the MACD and stochastic, very poor in IBM. So that's IBM. But wait a minute. Triple M, 1, 2, 3. Has just made a potential either a peak F or a B if there's no new high bar today. The MACD is starting to pull back, still quite strong, but pulling back, and the stochastic's holding at 87%. The weekly chart is made, I'm calling this a leg C. I don't see how I could call it anything else. The MACD is really strong, the stochastic's at 97%, and look at the monthly. The monthly is at all-time highs in leg E. Got to be a little careful, but that says, yeah, we could pull back, but Triple M is still a very powerful stock. So we've got new leadership like a financial in GE. We've got IBM, not good, not bad yet, but not acting well. Triple M, a little overbought, probably can take a bit of a rest. And now we go to UTX, which is my pilot light indicator, key stock. That has made, I have to call this a peak F. 4 days ago at 90.89, and it's a leg. I don't have a choice. Most of the others are in B or C in the weekly. I'm calling this E. I have no choice. I wish there was just one peak before that to have made that a D, and then I would have got the cup and breakout formation. And look, it hasn't yet made it. 80.30, 90.89. It just missed by less than a point, going to an all-time high. Still acting really well. Could be pulling back here. The Dow's down 51. S&P's now unch. And this is going to be a really important day. The Salt Lake formation has almost been completed. We'll be back straight after this break at 877-927-6648.
You take a hands-on approach to managing your investments, and whether you're bullish or bearish on Chinese stocks, the ETFs from Direction Shares are there to help you magnify your perspective. Bull ETFs for a rising market and bear ETFs for a falling market. Direction Shares gives you the tools for both sides of the trade. Discover how we can help at DirectionShares.com today. An investor should consider the investment objectives, risks, charges, and expenses of the Direction Shares carefully before investing. The prospectus and summary prospectus contain this and other information about Direction Shares. To obtain a prospectus or summary prospectus, please contact Direction Shares at 800-851-0511. The prospectus or summary prospectus should be read carefully before investing. An investment in the funds is subject to risk, including the possible loss of principal. The funds are designed to be utilized only by sophisticated investors such as traders and active investors employing dynamic strategies. Investors in the fund should understand the consequences of seeking daily investment results, understand the risk of shorting, and intend to actively monitor and manage their investments. Distributor Foresight Fund Services, LLC.
with the launch of Tiger TV. TFNN has brought our programming to the next level. With Tiger TV, you can gain access to each host's charts and computer screens as they host their daily stock program. Whether it's Tom O'Brien, Steve Rhodes, Basil Chapman, Ken Shreve, David White, Larry Pesavento, Victor Jones, or Carol Martin, you can catch all of our technicians hosting their programs live and archived on Tiger TV for your viewing pleasure 24 hours a day, 7 days a week. If you haven't checked out Tiger TV, then visit TFNN.com and see what you're missing.
McEwen Mining is a high-growth, mid-tier producer in the Americas with a market capitalization of $1 billion. Experienced mining executive Rob McEwen, as chairman, CEO, and president, owns 25% of the outstanding shares of McEwen Mining and has put in place an ambitious business plan with the goal of qualifying for inclusion in the S&P 500 by 2015. With $70 million in cash and liquid assets as of the end of 2012 and completely debt-free, McEwen Mining is poised for growth. Production in 2013 is forecasted to grow at 24%, reaching 130,000 gold equivalent ounces, and over the next 3 years, McEwen Mining projects that their production will increase to 290,000 gold equivalent ounces, almost a threefold increase from last year's totals. If you'd like to find out more about McEwen Mining, click on their banner on the front page of TFNN.com or check them out on the NYSE or TSX under the symbol MUX.
What type of investor are you? Conservative, moderate, or aggressive? No matter your investor personality, your overall portfolio should reflect your financial goals, time horizon, and your risk tolerance. Help ensure your portfolio is appropriately invested with an asset allocation plan from Morgan Stanley Wealth Management. Simply picking the right stocks is not enough. Research has shown that choosing the right proportions of stocks, bonds, and cash is essential to the success of your long-term investments. Morgan Stanley believes a carefully selected portfolio can lower volatility and increase investment return potential. Find out about what an asset allocation and a Morgan Stanley Wealth Management financial advisor can do for you. Call Angela O'Brien, First Vice President and Financial Planner of the Clearwater, Florida branch at 727-441-6108 today to discuss your personal financial needs. Asset allocation does not assure a profit or protect against loss in declining financial markets. Investments and services are offered through Morgan Stanley Wealth Management, LLC. Member SIPC.
Many of our new listeners have heard about the Tiger's Den, but wondered, what exactly is it? The Tiger's Den is a lively community where professional traders and investors can meet, exchange ideas and information in a comfortable, moderated atmosphere. Hear all of your favorite TFNN shows, plus see all the charts as they happen live during those shows and have access to all those charts. You can test drive the Tiger's Den absolutely free for 30 days. It will greatly enrich your knowledge of these markets. Details on the Tiger's Den are on the front page of TFNN.com. This segment is brought to you by Backtech Environmental. For more information, just click the Backtech banner on the front page of TFNN.com.
Hi, everyone. Basil Chapman. We are back, and what we're looking at here is the Dow is down 55 points at 13,962. S&P is now down 55 cents at 1518. Fascinating. Oh, fascinating. And subscribers to my opening call, we know we have a plan. And I'm looking at something that is so interesting. In being stock specific and trying to do as best as possible to try to choose stocks that have the potential to hold well here, what happens today is going to be very interesting, because in the stocks we were looking at, or might be holding, whatever, there are stocks that are actually, right now, one is up 1.33%, another one's up 2.45%. Let me just check this out here. Yeah, one's up almost 3%. So, as I'm saying, this is not necessarily what we might have some, we might not have some, but these are stocks that I focused on because how they act or react on this pullback is going to tell me a tremendous amount about the rotational aspect of any correction that we might be having or about to have coming up. And that correction could see a number of things. Will it include further pullback in the home sector stocks? Will this be a rotation in the sense that, yes, look at this. I'm showing you the three what I call the triple yield chart that I always show my subscribers every week. This is the weekly chart. This is leg D up in the yield. The 10-year, this is the white one. The 10-year yield is up in leg D. And every other peak, D or E, has seen a big turnaround. I don't know if that's going to happen right now, but this is saying that the yield itself is in the leg or close to the leg that sees a reversal whereby the bonds themselves, the TLT or bonds, start to rally. Okay, keep that in mind. The 5-year has gone to a D and made a peak D. The 30-year has not made the peak D. Not only has the 5-year made a peak D, it's been for 2 weeks. But a very tight, high-level consolidation. The same thing with the 5-year, the cyan-colored one. So what happens over the coming few days, it's going to be really important. Why is it going to be important? Because look at these charts here. Where's that chart here? I was talking about the home builders. In the charts that I've shown periodically, the HGX, the weekly S&P, the spider, is it the spider? I believe it's the spider. No, the Philadelphia Housing Sector Index is in leg D. Wood, which is the iShares of the S&P Global Timber and Forestry, is making a peak F, but so far with a high-level consolidation. So how those two react going to be really important over the next 2 weeks. Look at this. UUP holding quite well at 21.88, but still in a very tight band here. This is that H pattern that I call the lowercase h that goes to an M formation. Look at the way the S&P, this is the SPY, has gone. I have to call this leg B at this particular point. I could call it F/B. Just everything about it says this is leg B. And look what's happened to TLT. The TLT's pulled back. It's gone to a lower low and trough D. But it hasn't broken, has it? 115.51, 100.15.69 so far this week. I'm watching this real closely. If the TLT starts to break below the 115 support, that would say that yields are going to go higher, and that should in fact help the stock market. Now, I haven't gone to the GLD. I'm going to go to the GLD here. Let me run the numbers. I've not done the numbers. The Dow is down 53 at 13,964. There's a big discrepancy now between the Dow. Remember, the Dow was leading. Suddenly, you've got Apple helping the Qs, and the IWM and the Qs are doing fine. S&P is holding okay. Fascinating market. So we've got the S&P down up 2.38 at 1521. The composite index is up 5 at 3191. Gold is down only 2.50 at 1647. I'm going to watch that real closely. And silver's down. It's at 30.92. Platinum is still up at 1728. And high-grade copper is just in that trading range now, 3.73. Crude oil went to a higher high. It's 97.30 now at minus 21. And bonds are down 30 seconds. Look at the crude oil chart here. Let me go there. CL. I'm going to the H. That's March. Look at this. This is leg E with a strong rally, almost to touch the recent high. Hey, when we get back, I'll discuss it, and we'll take your calls at 877-927-6648. Basil Chapman, Tiger.
If you're an investor looking for a great weekly investment newsletter, then now is the perfect time to try out Ken Shreve's Ultimate Growth Stocks. Every Tuesday, Ken breaks down multiple sectors in his weekly newsletter, Ultimate Growth Stocks, with a full in-depth report including specific trading recommendations within his model portfolio, charts, sector analysis, upcoming economic data, along with intra-week trading updates on newsletter positions whenever the market dictates. Right now, you can receive a full month, that's 30 days, to evaluate Ken's newsletter free of charge to see if it fits your trading plan. At less than $75 per month, Ken provides you with his expert trading advice that can pay for itself in no time. Take advantage of this great offer by signing up for a 30-day free trial to Ken Shreve's Ultimate Growth Stocks today. Don't let this offer pass you by. Visit the front page of TFNN.com and sign up now. Just recently, on December 28th, Market Insight subscribers were advised to go long the QQQ, the NASDAQ 100 ETF, on December 28th at $63.91, and only 2 trading days later, after a huge jump in the markets, Market Insight subscribers were advised to sell the QQQ at $66.64 for a $2.73 or 4.27% profit to start off 2013. At the same time, Tom O'Brien had advised his clients looking for a more leveraged trade that they could have initiated a position in the QLD, the ProShares Ultra QQQ ETF, and over the same 2 trading days, Market Insight subscribers were able to lock in a $4.48 profit or an 8.47% gain in just 1 trade. Get your 2-week free trial to Market Insights today by visiting the front page of TFNN.com. Cancel at any time during your free trial and pay nothing. Don't miss out on the next great trading opportunity in 2013. Act today. Has the current market volatility continued to stop you out of trades when the market spikes against you? Now is the perfect time to open up an account with Nadex. Nadex, the North American Derivatives Exchange, is a brand new, completely regulated Chicago-based exchange, and unlike most other exchanges, Nadex allows you to trade directly through them with direct market access when using their completely free trading platform, which also features real-time charts and full customization capability. One of the advantages of trading with Nadex in volatile markets is that your risk is always capped and you have the ability of keeping your trades open even when the market spikes against you. Nadex is completely brand new with a line of unique trading products that are unavailable anywhere else. See how it works at nadex.com. That's NADEX.com. Or click on the Nadex banner on the front page of TFNN.com. Futures and options trading involves risk and may not be appropriate for all investors. Daryl Martin coined the phrase diagnostic trading, and we're happy to announce that his diagnostic box spread analyzer has finally been released. The Diagnostic Box Spread Analyzer helps you easily identify the best box spreads on Nadex in seconds, plus you receive access to the diagnostic deviation levels, as well as step-by-step training videos teaching you how to trade Nadex spreads so you can quickly master the mechanics of this simple yet powerful trading instrument. By pulling live data from the Nadex exchange, the Diagnostic Box Spread Analyzer does all the math for you, calculating risk, reward potential, distance to break even for both outright spreads and spreads used to hedge the underlying market. Visit the front page of TFNN.com today to get your 2-week free trial to Daryl Martin's Diagnostic Box Spread Analyzer and gain access to the valuable information it can provide when trading the Nadex box spreads.
This segment is brought to you by Harmony Gold. For more information, just click the Harmony Gold banner on the front page of TFNN.com.
Hi everyone, Basil Chapman. Let's just go straight to the Euro-USD currency pair. Now this is really important to me. These are the techniques that I like to use. You can see here in the daily there was this what I call the double top ChapmanWave drop bucket pattern. It looks like a drop bucket, like the backhoe picks up all the gravel and then just dumps it. It looks like that, and it dumps the price and pulls back, and then it rallies again, makes what I call a cup and handle, which often fails. That's exactly what happened. It breaks out, left side, right side, price time match, pulls back, and then whoops, it goes to peak E, pulls back, then it starts another move up, and then it goes to a peak D. And the ChapmanWave, the methodology that I like to talk about as being the easiest part, is going from an identifiable low bar to at least 4 peaks higher, and that takes you to a D, the 4th highest peak. That's where you've got to be careful. It doesn't mean to say that you always have to pull back like you did over there, but sometimes you can have what I call an instant restart. I don't want to get into that right now, other than to say the euro made a peak D on the 1st of February at 1.37105. It's pulled back. It's having a tough time trying to get above the 9-period exponential moving average. But coincidentally, and the reason why I took that seriously is that the weekly is making a peak D, but the MACD is still strong and the stochastic's at 85%. So I'm watching the 1.332, 1.30 area. If the euro pulls back under that, that'll be very negative. But in the meantime, it's holding okay, and that's important. Here's the EU, the USD JPY. Now, I use these things just because I notate everything there is, and I want to be able to notate it because it's all part of the panoply of instruments that we need to be looking at the overall market. Sometimes you can use just one technique, but most of the time you want that one technique when all the others, I always think of the fighter jets, you get this fantastic, you get this V-shaped, and they're going, and then one or two peel off on either side, and then they peel off until you got one. I like to think of it that way, and finally you've got your one indicator. Remember in 2007, I was left with one indicator in the Dow monthly chart, and that was the 9-period exponential moving average, and then it gave the sell signal. Look at the USD JPY. This is the US dollar Japanese yen currency pair. Look, the MACD is just turning down the fast moving average. It's just crossing the slow moving average, but the stochastic's still at 87%. And it's turning down. Now, this is one of the reasons why when I keep getting asked about the different indexes and what I use and what technical tools, if you look right here, you'll see right there, it's always inside here, right there. Underneath the stochastic is the RSI. You'll see that the RSI has been failing while the price has gone higher. Now it doesn't happen all the time, but there are techniques that you need to use to be able to identify when a particular indicator, I'm only using the RSI right now because I don't get volume on these currency pairs. There is volume, but for some reason I don't get it, so I can't talk about the volume. Otherwise I'd be using the on-balance volume. But I wanted to show, and now the RSI is negative, but the MACD is only just turning down, and the price is above the 9-period exponential moving average. Could this turn into yet another? You see, there was the leg. You remember I talked about the stalk leg, the body, and this is the neck right here, NECK, and then this is the head, and this is about to create a top that makes the beak, and the beak starts to come down. I would not be surprised if that's going to happen. I'm getting signals that say we need a bit of a rest here. Now look at this. This is leg D. This is the ChapmanWave cup and ladle breakout pattern in the USD JPY. It smashes through the resistance of 84.173. And it goes right out, breaks right through the 200-period exponential moving average. Look at the beautiful MACD. Look at the stochastic, 95.95, and the RSI is still very strong. That's that red line there. It changes color when it goes above a certain level. And you see the doji candle? Well, I have a rule about the doji candle. So we're going to follow this for the next 2 weeks because it's a 2 to 3 week rule. What happens after a doji candle? And that's saying to me, yeah, got to be a little careful. Look at the spectacular move in the USD JPY in the monthly, except for one little thing, and it's at 90% in the stochastic. If you put it back, this is nothing. This is like a little hiccup. This is like the dollar. The dollar keeps trying to rally. Look at it. It goes from an H to an M to another M. Poor old dollar in the monthly chart. Because why? I'm sure that the Fed is still trying to knock down that dollar. Now, the dollar, if it's going to really succeed, the dollar needs to get very quickly above 81.20. It needs to get and try to tackle the 81.46 high of the week of the 16th of November. Can it do that? There's a chance that in this particular move, if we get this digestive period, this pullback that I'm anticipating is coming, if it hasn't started already, it's real close in the NASDAQ. Yeah, I think it's going to be very close that the dollar tries to get there. I'll be watching it very closely. It hasn't done it yet. Well, let's look at our 3 bears, my 3 bears. So the dollar right now, the dollar must... Stop that. It's DXY. There it is. The dollar has to hold 79.60. If it breaks under 79.60, it's just not going to work right now. If it starts to break out, as I say, gets to the 80.60 level, it's at 80.13. This is the index. That's going to be very positive for the dollar. Remember, I showed you the UUP just now, kind of sideways move. So that means it needs to really pick up. The VIX index, VIX.X. The volatility index is moving a little bit here. Now, there is a positive divergence between the low that was made at 12.95. I've got to respect this, and I do. The respect is that if the VIX index, the 12.30 low on the 23rd, had the MACD, look at the MACD and the slow stochastic. I'll open it up a little bit. You see that? Made a peak D. Remember ChapmanWave? You expect peak Ds. Doesn't matter what it is. Oh, I meant to show this. I couldn't do it. I've got it right here. If anybody still has the Sunday Globe, the front page of the Sunday Globe, look right in the middle. It has a chart of wind speeds at Logan International Airport. Counted from the low on Friday. If you count each successively higher peak, you get to a peak F, then a pullback, and then the right shoulder failure pattern. We know these patterns so well in the ChapmanWave, and then what happens? It's all over, storm's done, and it starts coming all the way back. So, talking about the chart patterns, the VIX goes to 23.23, peak D in the daily, pulls back, gaps down, goes to 12.29. What would sustain a big move down in the market? If the volatility by Friday or Monday coming starts to break above 12.75, then it's really important that it breaks above 15.90 and starts to trade in the big gap down area between 15.93 and the low of the 31st of December, which is 17.88. Volatility index gets up there. We're looking at 300 to 400 points quite quickly on the downside for the down. Now let's go to the TLT. The TLT is not participating at all. It's down 56 at 116.17. But there is here again, there's a positive divergence because the stochastic is rallying. It's way above where it was when the TLT, the Lehman 20-year T-bond fund, slumped down to 115.51 on the 1st of February. It's been in a consolidation area. I could call this either a rectangle formation, just like that, whoops, like that, or I can call it, so far, the H pattern, the dreaded H pattern in the ChapmanWave. See, there's the H, oh, that was a mistake. Sorry, I didn't mean to do that. I'll need that just now, but I don't need it right now. To demonstrate what I'm talking about, I need to get rid of, come on, anybody home? All right, I have to get rid of this line right here. There it is. Remove, and I want a straight line. That straight line, see there? Let me make it a different color. What color can I'll make it a nice big blue color. This is blue, and we'll make this in blue so it really stands out. I really miss the black background. I could use so many different chart colors. There you are. So that's going to be a successful. The speed with which the TLT takes out 117.59 and the height that it goes to, if it goes into the 118.50s, and it does it quite soon, says to me, all of a sudden, I've got an inverted pattern. I can now go like this and say, aha, I could have a left side, right side price time match, and that could take me into, round about the 19th, 20th of February, where the TLT is now spiked into over the 118 area, into the 118.50, maybe 119. The bonds therefore are rallying, rates are falling. You've got the volatility index, which is breaking into the 15s or higher, and then you would have the dollar going to the 81.50 area in the index. So that's what I'd be looking for. So all I'm doing right now for subscribers is we're going to get some protection. If certain things happen in the market, we will be buying some protection. And why am I doing that? I'm buying it because while there's still a chance that we could move a little higher, we are now in that area that says it won't be that much higher, and I have to consider that the risk of a sudden move to the downside is increasing. I don't know yet about the time and duration, other than to say my thinking is 5 to 7 sessions, stretching over maybe 2 weeks, could be a little bit more, something like that. It's just a digestive session. Why? Because there are certain stocks that are really important that that are acting very, very well right now. If those stocks start to fail, then I think we're looking at something else. I'm going to add, just for the moment, the HGX. I'm going to add the HGH, which is the copper index. That copper March contract has made a cup. Well, it's actually made the double U. That's two U's. So we call it the DP in the Master Trader series. And that says there is still a chance that if copper breaks above 2.7925, the high of the 4th of February, to make leg D, that it could try to test the 3.829 area of October the 2nd of last year. But if copper starts to break down, if it's like a cup and handle failure pattern, if it starts to break down and goes under 3.68, I suspect I have to look at it and say, hey, that could in fact also be a market negative. So I wanted to go through those things. Now let's go through the indexes. 1, 2, 3. This is the Qs. The QQQ. I'm calling this leg C for now. Alternate count. Let me just, this is D 60, 67, 34, 67, 48. Okay. 67. So that's D, E, F maybe. No, this has to be, I'm calling this leg C for now. It could fail, but I'm calling it leg C. It's made the leg, the body, and the neck formation. Let me just clean it up a little bit. Maybe I'll miss something if I don't clean it up. Yeah, there it is. So that is a peak. Oh, you see, I had to clean it up. It's a C, it's a D. So let me just know. I've got to do this slowly. Could be an A. A, B. Clean it up. C, D. Oh, this could even be an E. Ha! Just as well I cleaned it up. Haven't been using it all that much right now because we've got Apple, which is wiggling up and down and up and down. So that could be an E and a D in a very quick A, B, C to D in the weekly of the QQQ series. Monthly is still looking great. Now, IWM is in leg. Oh, I must clean this up so that I don't make it all messy. Let's just get this exactly right. That's your obligation in the ChapmanWave, is to always get every single peak and trough. That's the only obligation. So that could be D. This could be A, B, C, or E, F, G. So this is also the same as, as the diamonds. G/C. All right, still strong. Look, the MACD is, MACD is pulling back in the IWM. That's the Russell 2000 ETF. But look what happened. We've got the stochastic at 91.62. All right, and leg D/B in the weekly chart still very strong. Stochastic at 98%. Hey, I'm not going to argue with that. And the monthly chart, all-time highs. Isn't that amazing? Do you see that in the newspaper? Any newspaper that the Russell 2000, that's the small caps, they've made all-time highs. Where was the heading when it was making all-time lows? Where's the heading when it's making all-time highs? IYC, this is the cyclical index. Very important. This is, I'm calling leg E in the daily after a nice cup and ChapmanWave cup and ladle breakout pattern. But it is leg E. MACD is not so great. Stochastic's at 88%. And the weekly is in leg D. Oh, look at that. And the monthly is in leg C. So that's still very positive looking out, even if it was to pull back. Oh, I tell you something. That bell is ringing too soon. We've got one segment to go, and there are a bunch of things that I want to discuss. Basil Chapman, Tiger Technicians Hour, 877-927-6648. Don't forget, you can sign up for tonight's webinar, free webinar, to my subscribers, and if you get a 2-week free subscription, you can go to that webinar. It's going to be very interesting.
Recently, Basil Chapman has had some outstanding trades in his newsletter, The Opening Call. Each morning by 9 a.m., Basil uploads his newsletter to the TFNN servers so that his subscribers can access his expert trading advice. Basil gives his take on the direction of key indices and updates any active trades that his subscribers are currently in. Just recently, Basil's subscribers closed out a short position in Chipotle Mexican Grill, CMG, for more than an $86 profit per share, over a 20% gain in just one position. If you'd like to try out Basil Chapman's newsletter, The Opening Call, Then visit the front page at TFNN.com and click Trading Newsletters. There you'll find Basil's newsletter, The Opening Call, where you can request a free sample copy. Also, don't miss Basil's program, The Tiger Technicians Hour, Monday through Friday, 11 a.m. Eastern, on TFNN.
Tom O'Brien's weekly newsletter, The Gold Report, has helped subscribers for over 10 years navigate the high-risk world of exploring and producing gold companies. And now's a great time to sign up for a free month-long trial to see the kind of insight that Tom delivers for his subscribers on a weekly basis. Every Monday, Tom O'Brien issues a quick update on the metal market, giving you his take on the HUI, XAU, GLD, dollar, bonds, and much more. Tom follows Monday's update with a full gold report, which is delivered to subscribers Tuesday afternoon with detailed coverage of 24 separate gold or metal stocks, as well as another 10 to 15 stocks that he lets you know are on his potential watch list. Get your month-long free trial to the Gold Report today by visiting the front page of TFNN.com. Don't spend another year navigating the metal markets on your own. Act early in 2013 and make the most of your gold and metal market investments. David White's newsletter, The Technology Insider, is focused like a laser on finding the next big things in technology. If you had invested only $10,000 in Microsoft in 1986, you'd have been a millionaire by 2000. Disruptive technology like Microsoft's is the key to these massive long-term profits, and the Tech Insider is the vehicle from TFNN to capitalize on these opportunities. This is the go-to newsletter that identifies, monitors, and profits on mostly little-known cutting-edge companies with great long-term prospects. David's experience is as an inventor of Emmy-winning animation products for TV and Hollywood that propelled a company public. Match that with 14 years as a full-time trader, and he's uniquely qualified to guide you through the light-speed world of ever-evolving high-tech. If you're ready to ride the next big technology bull market for less than $40 per month, log on to TFNN.com and get your 2-week free trial to the Technology Insider. Get in on the ground floor of the next big thing today.
If you could be granted one wish when it comes to trading and investing, what would it be? Would you like to learn how to make consistent profits on a continuous basis? I'm Steve Rhodes with TFNN, and recently I discovered a trading pattern more powerful than anything I've ever experienced before. This pattern works on all instruments and all time frames, and on February 20th from 6:30 to 7:30 p.m., I'll teach you how to master this pattern and show you how if you began trading with $100,000 on September 14th, 2012, you could have created $35,000 in profits in 4 short months. This trading pattern will transform your life, and the live online webinar is available to subscribers of my Mastering Probability newsletter. And now is the perfect time to sign up. Plus, if you're not completely satisfied for any reason whatsoever, it comes with a 30-day money-back guarantee with absolutely nothing at risk. This is a decision you won't regret. 60 minutes that will change the way you trade forever. Sign up for Mastering Probability today at TFNN.com.
This segment is brought to you by BackTech Environmental. For more information, just click the BackTech banner on the front page of TFNN.com.
Hi, folks, Basil Chapman. Now, the NQH, that is the March NASDAQ 100 E-mini trading vehicle, is in leg E. And there's a channel. And that channel that is working on right now has a resistance just a tad higher. But if I do this technique, and I don't know if I'll have time this evening to do it. But if I do this little technique here of what I use as what I call the inside track, I'll make it red, you will see that it's gone into the area where it very often reverses, even though stochastics only at 79%, under 80%, which is, I like it over 80%, and the MACD is flat. You have to watch this really closely, because if the NASDAQ is about to turn down, if the futures take out the 27, might call it the 2744 area, there's a good chance that the candle of the 7th of February at 2712, that candle will be tested. That kind of corresponds to what I'm looking at in the power in the QQQ series, trust series, that if in fact there is a pullback from here, if the Qs start to take out, they're at 67.78. If they take out 67.39, 67.39, 67, yeah, if they break under 67.30, then all of a sudden what you're looking at is that the pattern is complete. It's gone to an E, and that says, you're at this particular point, be careful. You could start the pullback. So I'm watching this closely for three reasons. One is, so far, the three bears, Vixie, Bondi, and Dolly, have good. The lows that they made over the last day or so are higher than the lows that they recently made, and the technicals are stronger, number one. So I've got to be aware that three bears could wake up and get the little bear suits on and come running out. That would say, be careful, market. Number two, we are overbought in all these different things, even though there could be a recycle in some of the indexes. At this particular point, my sense of resistance, you remember I've been talking about 14,189, 189, I think it is, 198 in the Dow, the all-time high, as probably not being made in this particular move. It'll be after we make a peak in the weekly charts, the next move up. This is what I'm thinking. I don't know if this is accurate. So this is a period for digestion. So that was all number one. Number two is, in looking at my Dow quartet, the IBM is probably the weakest, but UTX is starting to pull back. Just pull back. So far, I'm calling it a pullback. I don't know if it's going to be deeper yet. Triple M did everything it had to. Now it needs a little bit of a rest. And GE is the strongest, and I believe GE is like the XLF. It is telling me that the financials, and I've got an alternate county in the financials, G/C, but holding really well. These are the things I've got to be monitoring really closely at this particular point. So a heads up to say, we're getting somewhat overbought. Expect some kind of a pullback. Number one, make your buy list and make your short list right now, because tomorrow we could start implementing all of that stuff. The third thing, which is really important to me, is in terms of market psychology. I don't think I've heard a single person come on anywhere on CNBC or Bloomberg or read in any of the papers or any channel, any radio show that I'm listening to. We have some radio shows here in the Boston area that don't say money's going to come out of bonds and go into stocks. And that always says to me, maybe they're right, but maybe in terms of timing, right now is where you've got to be a little bit careful sentiment-wise. So, hope I can leave you with that. We've got great shows just coming up all day. I'm really looking forward to seeing you, all my subscribers, and those of you who are new, want to try to get a sense of what I do. 2 weeks free. Come to my workshop tonight. Free webinar for subscribers and people who get my 2-week subscription. I'd love to see you there tonight. Get your questions ready. I'm taking questions. We're going to hit everything. I'll be back tomorrow. Have a fantastic day. Basil Chapman signing.